The budget for 2021-22 had estimated that receipts from indirect taxes would grow 2.5% over a year earlier. The actual collections, however, indicate that the government might have been too conservative in estimating the numbers, perhaps because of uncertainty over its administrative measures and economic recovery in general. The government's indirect tax collections have increased almost 39% in the first 8 months of the current financial year. By November, almost 72% of the budget estimates for indirect tax mop-up had been realized, against 42% in the same period a year earlier. However, a comparison with the previous financial year may not be right due to COVID-induced lockdowns. During pre-COVID period of April-November FY20, 45.5% of the budget estimates had been realized. However, indirect tax growth in the first 8 months of FY22 has not been led so much by excise duties as by customs and GST. Last year, excise duties rose almost 62%, whereas customs tariffs grew 24%. On the other hand, GST contracted 8.3%. It should be noted that GST in the budget comprises mainly central GST and compensation cess. In the first 8 months of the current financial year, GST has risen 36%, whereas the budget had estimated it to grow almost 15% in the entire year. In fact, GST at 4.52 trillion rupees constituted more than half the total indirect tax kitty of 8.2 trillion rupees till November FY22. Customs doubled to 1.25 trillion rupees as the government raised tariffs on a number of finished goods to promote the Atmanirbhar Bharat program and the economy recovered partly. The budget had expected it to rise by less than 1% during the current financial year. Excise also surprised when it rose 23% to 2.42 trillion rupees till November of FY22, compared with the budget estimate of 1.41% decline. The cut in excise duty on petrol by 5 rupees a litre and diesel by 10 rupees a litre from November 4 did not have much impact in the month, but it would have some dampening impact from December onwards, since global rate for the Indian basket of oil has decreased to $73.30 a barrel from $80.64 a barrel in November, and Omicron has forced the government to go for select lockdowns since the end of December.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.